Hey everyone, hope you're hanging in there today. It's Simo from Investment Research and we're back for the daily look at SoFi on November 20th, 2025. The stock is holding around $26.72 right now, up a little from yesterday's close, but it still feels like it's carrying some extra weight after falling from that $32.73 high we saw just over a week ago. That is close to 18% down in a short time, and it has a lot of people wondering if this is a good spot to jump in or if there is more trouble ahead. But I am optimistic about the future of this company, and from my perspective, it could see some serious upside heading into 2026, mainly because the numbers they keep publishing are genuinely strong and getting better every quarter. And personally, I recommend starting to buy or adding more if the stock reaches the $24 to $25 zone. At that level, the risk reward becomes really attractive because I still see a bright future for this particular stock. It is well positioned compared to the rest of the banking and investing space. The growth is real. The shift to high quality fee revenue is happening and the member numbers keep climbing. $24 to $25 would be a gift, in my opinion, for anyone with a 1 to 3 year horizon. I went through all the new info this morning from places like MarketBeat, TipRanks, Fresh Filings, Reuters and Forbes, and the story is a mix of good and not so good. I am a bit doubtful about a quick bounce back, but let me explain it step by step like we are just talking it out. The price is still jumping around because some big groups that own shares are selling parts of what they have after the stock went up so much this year. Cathie Wood sold a little more not long ago, and the news that caught my eye yesterday was Rockefeller Capital Management cutting over 600,000 shares, which is about a 37% drop for them based on what MarketBeat shows. When a group like that takes money out after the stock doubled, it makes others nervous and adds to the selling. The good part is groups like Vanguard and BlackRock are not changing their big holdings, so the overall owners stay at about 38 to 40%, but these sales from the quicker groups are keeping the price down for now. One small thing that is not helping is when SoFi started letting people trade crypto in the app. It came right as Bitcoin fell hard, down about 26% this month to the lowest in 6 months, around $90,000. People were excited at first, but with crypto in a bad spot, SoFi is not getting the extra push from that yet. It is weighing things down a bit, but the main issues are the big groups taking profits and the feeling that the stock price got too high too fast this year. The people who study stocks are not changing much either. Their overall view is to hold with average guesses for the price in a year between $25 and $27.50. The optimistic ones like Mizuho and Needham stick to $36 to $38 because they like how many new users SoFi is getting and how fees are growing, but the careful ones keep guesses in the low 20s over worries about the price being too high. No new bad changes to their views, which is okay after the drop. To see how SoFi fits in, I looked at other similar companies and it makes me question if the market is being too hard on it. Block is up 50 to 60% this year, which is good, but they are growing slower as they get bigger. New holdings did even better with over 100% up, but that is mostly in one country with basic services. Alibank is up only 35 to 40%. Upstart is up 131%. But their growth stopped when rates were high. Lending Club is not moving much. SoFi is growing revenue 38% last quarter, adding users 35% to 12.6 million, fees up 50%, student loans up 58%, and making money for 8 quarters in a row. No one else is keeping up with that full set of services right now. First things first on what it is worth. The hard value of the company is past $7 billion and they plan to add another $2.5 billion in 2025. According to what I figured out, even if you use a normal 4.5 times that value, it points to low 30s without counting the extra growth. Places like 24/7 Wall Street see $55 or more by 2030, even if growth slows a lot, which seems too low when you look at what they are doing now. I am doubtful because the price is still higher than most similar companies even after falling, and if the economy slows or they miss on new users, it could go to low 20s before turning around. The stock guesses are mostly where we are or lower, and that makes me pause. But the way they are running the business is stronger than most others right now, so this 18% drop feels like too much to me. As a stock analyst, my personal recommendation is to start adding shares slowly around $26 to $27 if you can hold for a year or more, because the growth looks real and the price now gives a better chance for gains. But if you need money soon, I would hold off until we see it steady out. My view for 12 months is $38 to $42 if they keep going strong, and longer term $50 or more is possible. That is where SoFi stands on November 20th, 2025. The drop is from people taking profits and worries, but the growth beats others. Are you adding here or thinking it has more to fall? Let me know in the comments. Like if this helped, subscribe for tomorrow, and take care out there.